If you have a pre-approval, you might as well rip it up because this one change means they're worthless. Today, I'm going to walk you through what's exactly changed and what you can do about it. And if you find this information useful, it'd mean the world to me if you could hit that like and subscribe button because it really helps out the channel. And before we can understand what's actually changed, let's first delve into what a pre-approval is, how they work, and the conditions around them. And this is a pre-approval letter from ING, and it's fairly typical. And what we can see here is that it says that we're pleased to advise that your application has been approved in principle. And this is the key. Approved in principle. What it's not saying is it's not saying it's a formal offer. It's not saying it's formally approved. It's just saying that in principle, everything looks good. Now, the pre-approval letter goes on to say that please note that the approval in principle is a preliminary advice and is not intended to create any legal liability for a credit facility to be provided. And what we can see here is that the pre-approval is an indication of your ability to get approved. Now, it goes on to say that the pre-approval is valid for up to 90 days of issue, and it lists if there's any additional requirements that must be satisfied before settlement. And when you see these conditions, typically it means it's a fully assessed pre-approval. So that's great news there. It says that the valuation is required and that the valuation must meet the bank's requirement. So if it's in a location that is deemed unacceptable by the bank, then your pre-approval may not be valid. And it finishes off with all the documents which are required in order for you to receive a formal approval. So things like your contract to sale, confirmation of loan amount, your mortgage insurance and product if that changes, pay slips which are no older than 31 days, and where savings, loans or credit card statements are required, the most recent statements which are no more than 31 days old. And taking a look at another pre-approval letter to really hit home what they are so we can really understand the changes that have taken place and why it's affecting pre-approval so much. So this is another one from St. George and is very similar to ING, with it being an approval in principle for up to 90 days. And there's a few additional items that are really spelt out in this pre-approval letter. Firstly, that there's no significant adverse changes in your financial position, that the result being satisfactory if they need to re-verify your financial position. So they're essentially saying that they reserve the right to complete a reassessment on your financial position at any time. And this is going to make more sense when we look at the changes in a moment. And it also says that they may not offer you any credit if you as applicants don't provide the bank with further information if the bank deems it necessary. The big one to highlight, and we've talked about this many times on the channel, is that Lenders Mortgage Insurance haven't looked at your application. And it means that if you're in LMI territory, that your pre-approval is still subject to the mortgage insurer's assessment and approval. And we can see that's really highlighted in this pre-approval letter here. Also, if your credit history changes, so if you somehow get a default or something happens on your credit history, they can decline you even if you're pre-approved. And it finishes off with saying that the approval in principle is not a guarantee of formal approval. So now we've got a really good understanding for what a pre-approval is. Let's take a look at what has changed recently and why they're making pre-approvals absolutely worthless. With rates increasing, it's causing problems with pre-approvals. We've seen over the last 3 months that the cash rate has increased by 1.5% and is really causing problems with the assessment rates. And it's a tool the banks use to measure your affordability and ability to pay back the loan. So if the bank offers you, say, a 3% interest rate, they put a buffer on this. Usually it's a 3% buffer, which means that they'll assess your payments on a 6% repayment. But as interest rates go up, your assessment rate increases too. And taking a look at what 1.5% does to your borrowing capacity, we can see that with a 6% assessment rate, that your borrowing capacity is roughly $1.25 million, increasing that 1.5%, and it decreases it by more than or close to $200,000, with it coming to a $1.05 million borrowing capacity. And this is exactly the problem that's happening. And traditionally, banks would honor the pre-approvals based on when it was assessed, because many things change, such as policy, and assessment is just one of those many factors that the banks look at. So back in the day, if something were to change with their policy, they would honor the pre-approval, providing you it in their validity period. But with all this being said and all of these changes, we've been seeing the banks not honoring the pre-approval and reassessing the applications based on the new assessment rate and it's causing big problems, particularly for those that have purchased and their borrowing capacities have reduced. Knowing this now will allow you to really adapt to the market. Firstly, if you're going to auction, make sure your application is reassessed prior to attending. This will make sure that even if assessment rates have affected your borrowing capacity, that you know in advance what your limit is and you won't put yourself in harm's way. Secondly, know that not all banks are looking at the world this way. We do have lenders that will honor the assessment rate for up to 90 days. This means that providing you purchase in that 90-day window, then your limit will remain the same. It won't change. So it's really important to understand what you're trying to do, what you're trying to achieve, and if you are going for your limit, then finding a lender that will honor your assessment rate for that 90-day period, particularly as rates are rising, will be extraordinarily important moving forward. And while things have changed with pre-approval, they're still absolutely worth getting. Make sure if you are getting a pre-approval that it's fully assessed, that you're not getting it automated, and really understand and talk to your broker or banker to understand all the details around your pre-approval. If you're in mortgage insurance territory, will it be assessed? And what the parameters of the pre-approval are, whether the assessment rate, if it changes, will the bank reassess your application, and are there any other parameters that will cause issues when you do go for a formal approval when you found your home. And if you're looking for help with a pre-approval, here at Hunter Galloway we can help. We service Australia-wide and don't charge a fee. So hit us up at huntergalloway.com.au or call us on 1300 088 065. We love to help, and until next time, I'll catch you then.